Hi, my name is Tim Lucas from MyMortgageInsider.com. I'm here today with Tom Pessimir, a senior mortgage advisor with Mortgage Advisory Group in Bellevue, Washington. Today we're going to talk a little bit about first-time home buyers and common questions that they have, and specifically about money. First of all, how can a first-time home buyer know how much they can afford when they're buying a home?
That's a great question, Tim. Really it comes down to first having a really good, open and honest conversation with your loan officer. And any great professional realtor is going to recommend that first off before they really get out and start kicking tires, looking at houses, for a couple of reasons. One, often it's a matter of, the real estate agent, that goes out and shows a person a home, whether they qualify it or not. It's not always the best thing in terms of even customer service, because often, sometimes people can qualify for more house than what they're looking at and don't know it before talking and getting their numbers squared away. And other times it can be the opposite effect, or they get their hearts broken and they just can't pull off what they're trying to do.
Right. Yeah, it's much better to know what you can qualify for before going and getting your heart set on something.
Yeah.
How do real estate agents usually respond when a home buyer walks in and they're not pre-qualified yet?
Well, most of the real estate agents that I work with, that's usually the first thing that they're going to recommend to the buyer is, to have a conversation and really shake down and get really drilled down to figure out what's going on. There's so many moving parts, to people's financials these days, that it's always a good idea just to have your stuff looked at and make sure that you're ready to go. And sometimes people are really close, but they're not quite there. And sometimes there can be just some little changes that can be made to get somebody ready to go in short order. Other times that they're ready to go. Other times they need some time.
Right. So a lot of people maybe have, say, $5,000 in the bank or $10,000 in the bank. A lot of people are just really curious on how much they actually need to go out and buy a home. So what are some of the considerations that people need to think about as far as how many dollars they need in the bank before they go out and buy a home?
Right. Great question. It's different really for everybody. You get some people that, veterans, for example, or active duty military who are, eligible for a VA home loan. You can have $500 to your name and get into your first place, and you get the seller to pay your closing costs for you, and you're in a double zero situation where you're not putting any money to the table other than maybe $1,000 earnest money or $500 even in some cases. That same thing can be true with some other loan programs, but it's always good to see people that have some financial security about them, because it's not just getting into the home that people have to be concerned about. It's also sustaining that and making sure it's something that they can maintain long term. Buying a home isn't a disposable one-time deal. You do it and you're done. You have to kind of live with it when you're finished too.
Right. So what are some of the best home loan programs, as far as you mentioned the VA home loan, to have for a first-time home buyer program that might not require a whole lot of money? Are there other programs like that require kind of a minimal down payment and the lowest monthly payment possible?
Yeah, there sure are. The VA is one of my favorite loan programs for people who are eligible for that program, just simply because it comes either with mortgage insurance in terms of just an upfront funding fee, not a monthly premium, so it's financed over the life of the loan, and it's a small percentage. And actually, for veterans that have disability associated with their service, even as little as 10%, they're exempt from the funding fee for life. And there are other programs out there too, like the U.S. Department of Agriculture has a program that we call the USDA loan. It's also a zero down home loan, and it comes with a reduced mortgage insurance premium. It's about a third of what the Federal Housing Administration charges for FHA loans. And FHA is also a good loan for people that aren't able to get around the hurdles. VA, you have to be a veteran or you have to be active duty and eligible. The USDA program is geographically driven. It's meant for homes that are in a little bit more rural areas, and there's an income cap on it. In King County, Washington State, you can't make more than $93,450 per year right now to qualify for that program, and if you do, you're not eligible for it. So sometimes FHA is the ace in the hole. Other times it can be, other conventional programs that are backed by, Fannie or Freddie. There are a number of alternatives out there.
Cool. So basically, bottom line is somebody really needs to talk to a knowledgeable loan officer and see what they're eligible for. Some people may only be eligible for one loan program, depending on where they're looking for a house or their income level, and a myriad of other factors that could come into play. They could be, eligible for all, 4 loan programs, but maybe only just one. So they really need to probably contact somebody like you to just really drill down what they can qualify for.
Absolutely. And there are other things too that play into effect, like, if you've had a bankruptcy or a foreclosure or a short sale or loan modification, all these things can, some of the different programs have different waiting periods. So you're right. I mean, there's so much involved in, the process. It's a really good idea to have a conversation as early in the process, sometimes even months, or, I have people that I've been working with for a year that have finally been able to get into a place.
Right.
So, yeah.
Yeah, that's great. So another probably big concern from first-time home buyers is, are they going to be able to stay in that home long term with all the, just different foreclosure, things that are going on right now and things that are happening in the market. People are probably afraid when they're buying the first home if they're going to be able to keep that home for the entire loan term without losing it. How much money in the bank would you say someone needs to have to, to account for emergencies like a job loss or medical payments or a car blowing up or et cetera, those things that happen in life?
Yeah, God forbid. There are so many different things that can, play into what somebody really needs to be prepared for. And, I always like to go back to, refer people to financial advisors, because everyone's situation is so individual. I have a group of financial advisors in my area that I refer to pretty often because I get these questions a lot. And, really a certified financial planner is somebody that can really, again, drill down deep on the other aspects of the person's financial situation and, give a really good custom feel to, what they ought to do. But, I like the idea of having 6 months of all of your expenses in reserves, kind of across the board is kind of just a general thing. But, again, everybody's very, very individual. There are people that have, that have sources of income that are increasing, and they want to get into a home before the market really goes in the wrong direction much further. The market's really hot right now. So again, really, I think timing can be really important, but also, people's individual factors can, really customize the situation.
Right. So do you have any other final words about first-time home buyers and money?
Well, I think for anybody that's considering buying a home, it's amazing if you really look at the differences between, being a homeowner versus renting. One of the things a lot of people overlook is also the tax benefits of being a homeowner. And, I will regularly refer people to a couple of CPAs in my area to, run the numbers for them. And a lot of CPAs or accountants won't charge to do that, in anticipation that they're probably going to end up with a client, right, if you get into a home. But often people don't realize that, especially if they're in the upper income brackets, being able to really drill down to figure out what that's going to look like in dollars and cents. And then the appreciation is really kind of just icing on the cake. Housing has, historically always gone up. We've had a few bumps in the road, but long-term housing has always been one of the great staples of the American economy. So I think now's a really great time to buy, and I think people owe it to themselves really to figure out what they can qualify for and see if really they should become homeowners.
Great. Well, thanks for talking to me today, Tom. You can find more about Tom at PesamirFinancial.com. I'll put the link at the bottom of this YouTube clip so you can click on that. And also check out MyMortgageInsider.com. Check back soon for part 2 of this interview when we talk about the pre-qualification process and what first-time homebuyers can expect when they're getting pre-qualified. Thanks.